Hi there. Welcome to The Close. I'm Lindsay Biscaya. Markets will be closing in half an hour from now. So first, let's get to some of the stories we're following for you. The federal government is directing the CRTC to review its recent decision that will triple streamers' financial contributions to Canadian content, a decision it says will ultimately impact Canadians through higher prices. Ottawa will also issue new policy directions, which will include keeping services affordable for Canadians and ensuring flexibility for online streamers and Canadian broadcasters. The government is also investing $600 million to support Canada's audio and audiovisual sectors. South Korea is looking to triple its crude oil imports from Canada to 16 million barrels. An official visited Canada this week to discuss ways the countries could expand their partnership on energy supply chains. The increase in imports could grow to 20 million barrels in the coming years. South Korea imports nearly 70% of its oil shipments via the Strait of Hormuz. And home sales in Canada's largest real estate market saw an increase last month. Data from Toronto's Real Estate Board shows sales in the region rose 10% in May compared to the month before. That marks the biggest month-to-month increase since last July. Meanwhile, the average selling price saw a drop of 4.6% year over year. Housing markets across Canada have been slumping, with prices falling 20% on average since 2022. And we're keeping an eye on the TSX today. It saw quite the rebound yesterday, not so much the story today. It is down by more than 200 points. It's down by 0.8% at the moment, so almost a full percentage point. We're watching that for you. We're also watching U.S. markets, which seem to be dropping under pressure, of course, today from higher oil prices, rising bond yields. You can see the Dow Jones down by more than a full percentage point, and the NASDAQ as well. Also, the S&P 500 and NASDAQ have been seeing some runs lately, so keep that in mind when you see the NASDAQ down by 0.8%. It is quite a bit lower today. And as you just saw, stocks are heading lower today under pressure from high oil prices and rising bond yields. Canadian tech stocks also weighing down the TSX. So for more, joining us now is Nick Mersch, portfolio manager at Purpose Investments. It's great to have you join us. Thanks so much.
Thanks so much for having me.
Let's start with today's newsmaker, which is SpaceX, said to be pricing its IPO at $135 US per share to raise $75 billion. Do you expect to see better entry points later on?
Yeah, I think that's a great question, and what to think about as soon as it kind of goes public here. And this 135 per share is quite unusual. So they kind of went ahead and said, hey, we're going to fix the price at $135 per share, versus typically what they do is they go out during the roadshow and they set a target. And according to investor demand, they either increase or kind of decrease the price around that. And we saw Cerebras come out with a pretty hot IPO that popped off the day, but they're going for this price target, this price range originally, and keeping that fixed price. So it should be pretty interesting to see it here. And to put that into context, that $75 billion is absolutely massive. So the largest IPO in history before this was Saudi Aramco's at $29 billion IPO in 2019. And if you look at the sort of 1999 period, which was that peak year for IPOs at the beginning of the internet hype period, and you add up all 290 IPOs over that period and adjust them to today's dollar, that was $50 billion. They're going out and raising $75 billion. So this is a massive amount of capital that's coming into the system here.
Wow. We know Anthropic, OpenAI, also planning IPOs. Google is planning to raise $80 billion, which is even more than SpaceX's mega IPO. Where will the liquidity come from here, from all these companies?
Yeah, that's right. And I'll tell you what, with all these IPOs coming out, I'd love to be a real estate agent in the kind of California or the Bay Area right now, because there's going to be a lot of people that are minting tens of millions of dollars in terms of liquidity events coming up here. But that's exactly what the market's kind of talking about in terms of where this capital come from. And we're seeing some pressure in some of these assets, whether it's Bitcoin or even the mega cap tech companies themselves, as investors try to look and say, hey, okay, where is this being funded from in terms of where the capital is flowing from? Another thing you have to really pay attention to over these periods of the IPOs coming off is these lockup periods, because you have these lockup expiries coming up in different tiers, especially when it comes to the SpaceX IPO. They are having about 5% of the float that they're going out into the market to, but they've also got these tranche periods where more supply is going to be coming into the market. So you have to very closely watch these lockup schedules as these companies come public. And then you also have to think, hey, look, how much of the market market can absorb just how big these IPOs are. So definitely things to watch.
Meanwhile, we're watching Shopify today as well because it's buying back rather than selling equity by boosting its share buyback program by $3 billion US. How do you rate this move? Because it seems as though investors not too happy with that today. The stock is down at least.
Yeah, absolutely. And I think a lot of these kind of software stocks are selling off in tandem today. And we see these moves in the market where you have semiconductors up and then software down sharply. The Shopify buyback is super interesting because they've got that $3 billion, and it's typically a strong signal that management is seeing the shares as very attractive. But the market is still focused on this bigger debate, right? Whether AI expands Shopify's opportunity or really compresses the value of these traditional software platforms. Because when it comes to Shopify, you have to think, okay, the discovery of a lot of these different sort of e-commerce products is really changing in this new world. We have people discovering new products through these consumer chatbots, whereas Shopify's sort of motto here has always been arm the rebels, and they really partner up with these individual e-commerce websites. And what they're doing is really playing nice on the AI front. They're saying, okay, look, it's actually incredibly difficult to catalog your entire inventory. So they're playing nice with a lot of these AI players and really going in and helping them integrate into that solution. Now, the market, it's still undecided on whether this is a winner or loser over the longer term. But look, their CEO, Toby, is incredibly receptive to AI and is incredibly all over it. So a buyback here could signal a lot of sort of positive signals overall. We had mentioned the Google one in terms of them going out and issuing stocks or going the other way. And people are saying, oh, how are we funding all these data center infrastructure plays? So typically it was on cash on hand and then also free cash flow. And then some debt started to creep in. But the market's paying attention now, saying, okay, they can go out and issue equity as well. So really interesting here in terms of who is buying back stock and who is issuing equity in the market. And it's really telling you a picture of who's got the pricing power in these securities.
Interesting. You're also keeping an eye on Palo Alto today. It is sliding. It's down almost 6% at the moment, despite beating quarterly estimates after the close yesterday. Why do you think investors are unhappy with the results?
Yeah, I think Palo Alto is a very good example of this new software debate because AI is likely a very much a demand accelerator for cybersecurity, but investors are still going to scrutinize sort of the valuation, acquisition contribution, and really the durability of this free cash flow. And when you think about the kind of security space overall, there's this explosion in data because now it's extremely easy to create all these apps, and you got a lot more of these systems starting to talk to each other and an absolute data explosion. We had a security model from Anthropic come out called Mythos, and essentially a lot of people were going into panic mode saying, hey, look, it's uncovering a lot of these sort of zero-day vulnerabilities and introducing a lot of vulnerabilities to software that was typically perceived to be safe. So as you have a lot of these sort of bad actors in the system that can use these AI programs to hack into people's sort of accounts and gain some more information, you need to secure this a lot more. So people are still very much sorting in real time a lot of the AI winners and a lot of the AI losers, especially in the software space, because we saw a strong rally in that space over the last couple of months.
Okay, that's all the time we have, so we'll leave it there. Nick Mersch, portfolio manager at Purpose Investments. Really appreciate your time and your insight. Thank you.
Thanks so much for having me.
Up next, the Office of U.S. Trade Representative Jamieson Greer has identified dozens of countries, including Canada, for inadequate enforcement of rules against goods produced with forced labor. We're back in a moment with that. Trade Minister Dominic LeBlanc met with U.S. Trade Representative Jamieson Greer yesterday in Washington. On what was discussed, we spoke earlier with Diamond Isinger, former special advisor to PM Justin Trudeau on Canada-U.S. relations.
The government has made very clear all along to the U.S. administration that they're eager and willing to have any conversation at any time that the U.S. is game. And that's what they did yesterday in anticipation of additional follow-ups that will need to happen over the coming weeks ahead of this, long anticipated July 1st deadline, however firm that ends up being.
And what do you think of his call, LeBlanc, that we should have a 16-year deal? We'd like to see it go 16 years. Who's that playing to?
Yeah, it's consistent with the commentary that the government of Canada has made all along, which is that CUSMA serves the three countries very well. It is helpful for business and investment stability to have a renewed agreement for the long term, not to get into some sort of annualized cycle, for example, of reconsideration of this agreement. And it plays to, I think, increasing some urgency on the United States to take some action here, with them being the partner that we are most waiting for the willingness to sit down and have proper conversations with, and also to stakeholders across the continent, including business leaders who can hopefully exert some additional pressure on the U.S. administration that will resonate far more than the government of Canada saying that same thing.
And with the meeting, should we take something from the fact they got together? I mean, we heard Trump afterwards calling 51st state again. But should we take something of the fact they actually did sit down?
Yeah, absolutely. It's very positive that they had that opportunity to interact while brief. It's a little bit awkward, of course, because the U.S. Trade Representative was heading off on a trip internationally that I believe he left for last night or early this morning. He's going to encounter in that trip abroad another Canadian, our Trade Minister, Maninder Sidhu. Perhaps they'll have the opportunity to have some brief conversations on the margins of some international meetings. But it's always positive when we can have those conversations face to face in the room together, particularly because the bluster or the rhetoric or jokes about annexation on Truth Social, for example, are actually the outlier here. Most positive is when Canada and the U.S. can have working level constructive conversations face to face, relate our interests to each other, figure out some common ground and ways to move forward, away from media and social media. It's
been kind of nice. We haven't heard that comment in a while, so that part's been nice. Now, of course, there's negotiations going on with Mexico as well. Are we in this, like, oh my goodness, like it's almost like we're dating the U.S.? They're talking to Mexico more than they're talking to us. Should we be worried?
Oh, in that metaphor, I'm not so sure. I mean, back in 2017, back in 2017 and 2018, this was also the case, actually. We had very formal trilateral renegotiation talks going on in these rounds that took place throughout North America over the course of about 18 months. But at different points, there were actually bilateral conversations that did happen separately between all of the parties, but including the U.S. and Mexico. Those at times seem to be operating on a different track, perhaps faster or with more progress. I don't take that as a deal breaker, though, for the possibility of getting to this renewed CUSMA with the three countries involved, because Mexico and the U.S., as the Prime Minister has said, as many commentators would observe, they have their own unique issues. There are many issues, including, as you may ask about in this conversation, last night's new forced labor tariffs that came out from the United States. We have very different labor realities, for example, in Canada versus Mexico, very different workforce realities, very different dominant industries. And so I think it makes sense for Mexico and the U.S. to have those conversations, but with the goal of getting to the table, all three together very shortly for a formalized review.
And I wanted to get your thoughts actually on that we're actually facing that tariff, the forced labor tariff. Is that just a play or is it legitimate?
I mean, forced labor is not an issue in the sense that it's important that countries take action. Canada has previously had legislation that was introduced and passed to take action in this regard. I understand from your coverage, the Prime Minister has just made some comments indicating that Canada is willing and able to take additional action. But really, this is yet another endeavor by the U.S. administration, and particularly the President and the U.S. Trade Rep, to essentially replace the tariff regime that was in large part struck down by the Supreme Court with a patchwork of other tariff possible avenues to see what is durable. They were told essentially that their prior approach was not legal and that they couldn't proceed in that way. And so we've seen a number of other tariff issues come forward in recent days and weeks as they try to replace that with this new set of options.
All right, last question. We're almost out of time, but July 1st, carved in stone?
No, absolutely not. If you had asked that question a few months ago, perhaps the answer might have been different. We have this deadline that actually is from the agreement itself. It makes reference to July 1st. It's not a deadline that media or stakeholders or government made up independently. It has existed all along. But the urgency of actually resolving this issue by that date versus instead making progress and signaling our clear intentions, that is the piece that has shifted. I think it does provide some useful pressure, though, Mexico, as if there wasn't already enough just inherent economic pressure for the three countries to come to the table to have those conversations. But I think the real time pressure this year is really going to be in and around the U.S. midterms, as the U.S. administration continues to feel pressure under the rise in cost of living, of goods across the United States, job losses, et cetera, that are influenced by tariff pressures, and hopefully getting to a solution.
That was Diamond Isinger, former special advisor to Prime Minister Trudeau on Canada-U.S. relations. We will continue our coverage of the Canadian-American trade relationship right after this. Stay with us. Canada's Cabinet Minister Dominic LeBlanc met with U.S. Trade Representative Jamieson Greer in Washington yesterday. Following that meeting, LeBlanc stated that Canada presented new and detailed trade proposals to the United States, reflecting recent progress in negotiations. Our next guest remains unconvinced, though, by that optimism and cautions challenging times lie ahead. So let's bring in Lawrence Herman, international trade, investment, and public policy lawyer at Herman & Associates. It's great to have you join us. Thanks so much.
You're welcome.
Based on what we know so far, what trade proposals do you think LeBlanc might have put forward here?
You know, it's very hard to say. These so-called negotiations or talks or contacts bilaterally have been shrouded in a lot of secrecy. But I think that Canada put forward areas where free trade or liberalized trade between Canada and the United States is of great interest to the United States. I'm sure there was some element of critical minerals referred to in the proposals, as well as other things, possibly some energy issues, possibly some agriculture-related issues. But we really don't know, and we don't know very much about what's on the overall agenda. But my point is that it's going to be tough. We're dealing with a customer, a partner, who really isn't convinced that free trade is a viable prospect. In fact, what Greer has said, the U.S. trade representative, is that if you want into the U.S. market, you have to pay a price. So that's what's driving the U.S. policy on this matter. And part of that policy is the use of tariffs, unbridled, unrestricted use of tariffs. And that is a weapon that is being used in this trade war. I'm not sure that we're going to see much accomplished on the tariff side. There may be elements of a deal possible. We'll have to wait to see how things unfold. The Canadian government has said they want the agreement extended for another 16 years. That's a pretty good opening proposal. I don't think the U.S. will buy that, and so we'll probably see over the next number of weeks a kind of stalemate where the USMCA, or the CUSMA as we call it stays in place with the tariffs basically as they are now, and with ongoing annual reviews of the agreement. But I doubt very much if the U.S. is going to be prepared to say, yes, we agree to extend this deal with some modifications maybe, but we agree to extend this deal for another 16 years. The United States isn't going to do that.
Then how much do you think Canadians should be bracing themselves for some really drastic changes here, right? If CUSMA doesn't look the way it does right now after these negotiations and not as many goods are covered under the free trade agreement, that could really hit our economy hard, even more so than our economy's been hit.
There's no question about that. I think the best that we can hope for is that the status quo remains. That is to say, CUSMA-compliant goods come in without tariffs. But I doubt very much if the U.S. is going to move off their tariff war when it comes to Canadian autos, auto parts, aluminum, steel, and other goods. There may be something in the works that would allow for some kind of deal on these, but I don't see any sign that the U.S. is interested in moving away from where things are now. And one thing that I think Canadians have to understand is that the U.S. is not going to remove the exemption or the off-ramp for any issues related to so-called national security. The national security issues in the United States are primary, and that is the basis upon which the Trump administration wages its tariff wars. So there'll always be, I think, some kind of off-ramp for anything that the White House says is a threat to U.S. national security. Canadians are going to have to be prepared for ongoing, in my view, regrettably, ongoing uncertainty in the trade relationship.
Mexico has already entered into bilateral negotiations with the U.S. What do you think explains the differences here in how Washington has engaged with Mexico compared to Canada so far? Or are there any differences?
Yeah, well, there's a lot of gnashing of teeth and wringing of hands in Canada because there's discussions bilaterally with the U.S. and Mexico. I don't think that's unusual. I think that the issues, the irritants between Canada and the United States are different than those between the United States and Mexico. And it, is certainly feasible for the U.S. and Mexico to resolve a package of issues, and Canada and the U.S. to resolve their issues, if that's possible. And at the end of the day, if there is some form of agreement, these could be wrapped together into some kind of ongoing Canada-U.S.-Mexico agreement with these side letters, side deals that would resolve these bilateral irritants. So I'm not fussed about the fact that the U.S. is talking to Mexico. In fact, in many ways, the concerns at the border are paramount for the United States. So they have many issues that they want to address with Mexico, probably far fewer and far more difficult than any issues they have with Canada.
You say Canada has leverage through critical minerals, agriculture, energy. If that's the case, why haven't we been using that yet? Or is that time just not come yet to really leverage those?
Well, maybe the time hasn't come yet. You hold your cards close to your chest, as they say. I think that Canada has a certain degree of leverage that can be used at the right time. But let's see what the opening round of these CUSMA, USMCA talks lead to. If there is some kind of opening, some indication that the United States is prepared to do a deal, Canada can put its cards on the table. But we have, as I indicated, certain leverage on critical minerals, on the agricultural side, on energy, and certainly when it comes to alcoholic beverages, we have leverage. So these things will come out in the course of the discussions, but let's be prepared for difficulties and recognize that unlike most trade negotiations, the U.S. is not wedded to the notion of a three-party trade deal for all of North America. They see their economy as one in which anybody needs to pay an entrance fee to get into their market. And that's what's driving their trade policies, and that's what's driving and will drive the USMCA CUSMA review talks.
Okay, we will leave it there. It's such an interesting conversation. I'm sure we'll be chatting again about this in the near future. Lawrence Herman of Herman & Associates, appreciate your time. Thanks for coming on.
My pleasure.
Let's take one last look at the markets before they close. We'll start with the TSX. It's down, and probably down to end the day by more than a full percentage point. We're seeing tech stocks really dragging the markets down today, as well as U.S. markets. It's a similar story there. You can see all in the red. We'll continue to watch that because up next, the closing bells on Bay Street and Wall Street. We'll be right back. Here are the closing bells at the NASDAQ. Goldman Sachs Asset Management is ringing the closing bell tonight. On the New York Stock Exchange, Core and Main rings the closing bell. And on the TSX, Versify is closing the market. You're watching The Close on BNN Bloomberg. I'm Lindsay Biscaya, and here's how we close the day on Bay and Wall Street. We'll start with North American markets. Not as positive of a day for the TSX, down more than a full percentage point to end the day. S&P 500 and NASDAQ also seeing some losses. The NASDAQ down by 0.8% to finish the day. We know that tech stocks were really dragging down the American markets and the TSX, but we'll also take a look at some of the big movers of the day, specifically on the TSX. When we talk about leading the TSX, Advantage Energy was one of the top performers, up by almost 5% to end the day. We know the energy index was helping to boost the TSX up today. DPM Metals, another stock that closed higher on the TSX, more than 3% to end the day after seeing bit of a run once again since the beginning of this year. And Kelt Exploration also ending the day higher, almost 3% as well. Closing the day in the red today, the materials sector really kind of dragging things down, the price of gold and silver falling, and that affected some companies that we're looking at. Lithium Americas also down to end the day. I believe it was one of the biggest laggers. It was down almost 9% to finish the day. And then Aya Gold and Silver, as I mentioned. Metals down today, Aya Gold and Silver, this company kind of, the stock price at least reflecting that. You can see it's down by more than 8%. And NextGen Energy was another big lagger on the TSX today. It was down almost 8% as well to finish the day. And for more, we are joined now by Bloomberg's equities reporter Stephanie Hughes to break down a couple of different companies. So Stephanie, great to see you as always. Advantage Energy is the first one you're talking about today. Shares were up by nearly 6% at the highest point. This is the biggest boost in over a month. What's going on here?
For sure, Lindsay. Great to see you too. So yeah, it was the biggest boost for Advantage Energy in over a month, as you said. Shares gaining by nearly 6% at their highest point, and it was also enough to bring the share price to its highest level since early April. So it did regain some ground there. And it's really rising in tandem with other oil and gas names as energy prices rise on escalating tensions between the U.S. and Iran, which is really raising these concerns that peace talks can be pushed even further away. So that pulled the price of West Texas Intermediate, up by over 3% at its highest point to a high of $97 a barrel. So that was its highest level in about 2 weeks. And that made it another one of those days where a lot of the top 10 performers on the TSX were energy names because of that dynamic. And that was the case for a good chunk of the trading day today. So obviously, it wasn't just Advantage Energy that was rallying today, though it was leading the gains in that peer group. But you also had other names like Kelt Exploration, which you named, Vermilion Energy, and so many others. So it's usually kind of because of the volatility of commodities, it's a kind of a group that either finds itself nowadays at the top performers or among the bottom performers, Lindsay.
It seems that way. And speaking of the bottom performers, Abra Silver Resources, we saw the price of gold and silver dropping today. And for this company, shares tumbled nearly 10%. That's the biggest setback in more than 2 weeks. So obviously a reflection of what we're seeing on a larger scale. Is that right?
That's right. Yeah. So it's basically it's a commodity space that's going the opposite direction than oil and gas. So the same geopolitical issue that's giving a lift to energy prices is really weighing on gold and silver, bringing companies that produce them down as well, obviously. So gold spot prices dropped by over 1%. Silver spot prices, those were down over 2%. Not a massive cratering by any means, but it was enough to do some damage on some publicly listed companies. And the reason why gold really gets pressured in this environment is because the inflation shock concerns that come from the Middle East, particularly with energy, as we just mentioned, that actually makes it really, higher inflation makes it a lot more difficult for central banks to lower interest rates, particularly the Federal Reserve, because they really don't want inflation to run rampant and get out of control. Their job is to keep a level on that. So gold really thrives in a low interest rate environment as an asset that doesn't yield. It's a non-yielding asset. So it's putting pressure on not just Abra Silver. In fact, that was the one of the worst, or the worst performer on the TSX for a good chunk of the trading day, earlier in the session at least. But it's also causing some strain to names like Aya Gold and Silver. You mentioned them, Avino Silver and Gold, and a few others. So gold and gas just trading places, apparently, Lindsay.
Seems like it. Okay, Bloomberg's Stephanie Hughes. Thanks so much, as always. Appreciate it. And joining us now for some movers south of the border is Bloomberg's Avalon Parnell to break some stocks down for us. Avalon, great to see you as well. So you are beginning with Medtronic, which reported earnings today. It seems as though investors happy with what they heard. The share is up almost 6% to end the day. What are you hearing?
Yes, no, you're absolutely right. Medtronic was one of the top gainers on the S&P 500 today, and that's after the medical devices maker reported revenue for the fourth quarter that really beat expectations. And practically across the board when it comes to Wall Street analysts, they had a lot of positive things to say. One person that I would love to point out is Needham. They were writing that new products drove Medtronic's strongest organic growth in nearly a decade. And also worth noting that that's their biggest one-day jump since 2020.
Wow, you're also watching shares of Ulta Beauty. They were under pressure today on the flip side. We'll take a look at how Ulta Beauty ended the day down more than 5%. What's going on here?
Yes, definitely not as great of a day. They ended at their lowest level in nearly a year. And that's after the beauty retailer's outlook implied a weaker than expected second half of the year. Jeffrey's writing that conservative setup could leave a little bit of wiggle room for upside as management remains really cautious, understandably so, amid the ongoing war in Iran. All the usual suspects in terms of like the cost that could potentially drive consumers away. Right now, their shoppers haven't really changed in terms of like those numbers, but JP Morgan writing that the guidance does seem muted by an industry-driven May slowdown.
Okay. Bloomberg's Avalon Purnell joining us. Avalon, thanks so much for that. Appreciate it. Up next, market slipped as the Iran war pushes up oil prices and bond yields. We've got more details as well as some stock picks after the break. Stay with us. The continuing U.S.-Iran war has pushed oil prices and bond yields higher and stocks lower, but earnings growth is still a positive driver for the market. That's according to Thomas Martin, Senior Portfolio Manager at Global Investments, and he joins us now. It's great to have you. Thanks so much.
Great. Thanks for having me on your program.
So with the Iran war seemingly set to drag on and everything I just mentioned, we've got SpaceX, we've got Anthropic, OpenAI set for some IPOs. Is this a good time for these mega IPOs given the state of the market?
Well, the state of the market is still pretty strong. We're at all-time highs. So unless something happens between now and then to make the market move drastically lower and lower multiples and valuations, it should be a very good time for them to come. Probably each one of them wishes they were the only one coming because it is a fair amount of supply and things to digest in terms of your portfolios.
Alphabet also getting into the mix as well. It said it will raise $80 billion US through share sales. So that's even bigger than SpaceX's target. Is that an attempt to kind of corner funds that might get swept away in the mega IPOs instead? As you mentioned, it's a little crowded.
Well, you know, they do need the money. I mean, the investment that these companies are making, they feel as though it's urgent and the CapEx needs, and they do want to be first, and they do want to get the money as cheaply as possible. So it's quite possible that Google was thinking, okay, maybe we did have some time for our plans, but now we really need to get this together a little bit more quickly to make sure we can get those funds. And since they just they don't have an IPO to do, they can just do an offering. It's a shorter process for them.
We've seen also Bitcoin is sliding this week, and it fell again today. What's pushing Bitcoin down, do you think?
Well, you know, there's a number of things, and Bitcoin is always somewhat of a mystery. And I mean that in the sense that there's a lot of traders that go on, and it's a lot of technical analysis. I think that what a lot of folks are watching over the longer term is the longer 4-year cycles. And, you know, we're in the midst of the downside of one of those and looking for where that bottom is. I think that people were hopeful that that bottom had already come and we were on the way back up. But that doesn't really appear to be the case. On the more fundamental side is that you had strategy selling some. They didn't sell enough to move the price really at all, but just the idea that this Bitcoin hoarding firm or collecting firm, whatever, is selling means that maybe Bitcoin is in trouble. Also, I think over the last year, Bitcoin has changed. What has changed is what it can be used for and what it's useful for. And with the advent of stable coins to take the place of a store of value or as a medium of exchange, that's one less thing that Bitcoin is available for. So it's going through a bit of a transition period here, and I think that volatility just gets wrapped up in traders' positioning and their leverage.
Okay, we've got a couple of big earnings out of the U.S. this week. Palo Alto is one of them. Macy's, both beating estimates. You believe earnings growth is still a positive driver for the markets. Is that true across the board, like for most sectors?
Well, it is. All sectors are expected to be positive, at least in the S&P 500 for 2026. Some more positive than others, but still all positive. The biggest growth is coming in energy and technology and materials. But those growth rates are still fairly strong, and so every earnings is being watched very closely.
Right. And if higher oil prices persist, I wonder if that could dent the earnings growth story that we've been seeing.
Well, it could. It depends on how long it goes and what happens to that price. At these prices, companies are able to make adjustments. We saw companies being fairly flexible last year with the tariffs. And even though this is different, there's still a lot that companies can do in terms of adjusting their supply chains and just adjusting their products, their competitiveness, and their customers and where they source things from. So they do have some room to maneuver as long as I think oil prices stay fairly contained in here.
Okay, we've got a couple of stock picks that you have, and I want to get to those before we wrap up here. Your first pick is Qnity Electronics, provider of materials to the chip sector, up 85% year to date. Tell us more about this company, why it's one of your picks.
Sure. Well, what this company does is it really sits at the intersection of semiconductors and chemicals. It was spun out of DuPont, where it was not very much noticed. But what they do is they solve materials engineering problems across the semiconductor value chain. 90% of their products are